Yeah, so we thought we'd talk about the year that was, and I guess the year that we're expecting tomorrow, and sort of what's in store for us. And I guess obviously there's lots of stuff happening, lots of stats coming out and things. And I think it's we were just talking before about the fact that you're not going to find any positive in the news, are you, in terms of stuff that's going on? Because obviously the government wants us to spend less, and so they're going to make it that happen through negative media, through everything you know. So it's interesting because I'm in Australia right now, back in the UK in January, but you're obviously getting the news over there. Is it really that negative? Because it seems to be there is lots of negative, and UK seems to be the worst faring of all the countries in the world, and
Yeah.
yet I've seen that happen continuously for 20 years. Really, it seems to be the UK is always the worst hit, the worst this, the worst that. I don't know whether that's actually correct, but yeah, what's your thoughts on that?
Yeah, but look, it's the UK media, right? Whether it's our economy, our property market, our job market, our sporting team, England World Cup. Won't talk too much about that, but it's sensationalism, right? Maybe look, it's the media all over the world, but the UK media do like to dig their nails in really hard and pick up on the negatives and really. And it's interesting, even when I have my morning coffee and put the BBC News on. And I'm going to stop soon. I've got to stop doing that and just jump on my podcast instead. But it's always,
Yeah,
doom and gloom, even to the degree when there's something positive out, as in where we had some growth, which was
yep,
unexpected.
yep,
Look, I'm not saying that growth, I'm jumping onto that growth figure and saying, yeah, look, everything's rosy now and we're jumping onto the other end and everything's going to start going up. I'm not. But it was some positive news. But yet, somehow the media, the BBC managed to sort of very quickly put that fire, that little bit of optimism out
yeah,
by saying, well, we're still going to be in a deep recession, it could be the longest one ever, and all the usual stuff. And for me, it's like when you listen to people from Bank of England or Jeremy Hunt, right now they are so focused, and I'm not saying wrongly, but they are so focused on that inflation figure coming down. Because their task,
yeah,
Bank of England, are tasked with that inflation target. You know,
yeah,
and it's just simply like if you're working for a business, if your role is X and that's your task, that's your KPI, that's what you're measured on, that's what your bonus is coming on, everything is about that, then of
yeah,
course you are going to be focused on that part of the business and up to a certain degree not care about how what you're saying and what you're doing is sometimes affecting that section of the business,
yeah.
because they might not quite be always aligned. So not I'm not surprised, but it's just a case of being aware of it and understanding the detail behind and what is actually happening versus
Yeah.
just those negative headlines.
I think it's interesting because obviously, you've got strikes, and there's
Yeah,
strikes happening today, tomorrow, and 2 days next week, which is always the case when this happens, when inflation hits and recession. Everybody wants more money because obviously their cost of living is going up, et cetera, et cetera. But it is an interesting thing because I was watching a thing today where the I forget who it was. I think it might have been Jeremy Hunt saying, "No, we have to stay focused on inflation." It was almost like forget everyone else, forget the people, forget everything. Let's just go back to straight up, get inflation in check and it'll all be all right. Well, it won't be all right. All these people who aren't surviving and actually aren't paying their bills and aren't heating their home and all that sort of stuff aren't going to be right. And I think that's where I think economists, and look, I've studied economy at economics at university and school and all that sort of stuff, and I think it is very easy just to go, okay, if we get inflation down, then we get this, but you forget about the human aspect. And I think anytime you don't bring the human aspect into something, you are going to miss something, and you are going to there is a cost to that, whether that be a political cost, whether that be an economic cost, whether that be a financial cost. That's yet to be seen. So I mean, there's some pretty serious strikes there, and it looks like there's no budging. So it sounds like we might be in for a winter of discontent. Um,
yeah,
yeah, I mean, one of my other mates is actually holidaying over there. He lives in Singapore normally, which is 31 degrees normally during the day. It's -6 where he was. He was showing me the temperature, and so he's like, "I'm glad I'm leaving tomorrow." But I tell you, it's going to be interesting. We've had our maintenance team we normally get about 40 to 50 calls or jobs per week. We've been having 70 to 80 calls per week already, which is a big, big jump. Now, normally that would happen in January, but it seems to be brought forward. And obviously it's a particularly cold spell. I guess that's going to that's going to weigh in on the economy. And I guess flipping over to one of the other conversations we'll talk about is the GDP. We've just had a quarter of negative economic growth, 0.2. We get another one, we're in a recession, even though who knows, our politicians might do what the UK, the US guys have done and said, oh no, that no longer means a recession. Well, it is a recession. I think we're in recession. I think, things are slowing down. Maybe we might sneak out with some positive growth. Who knows? But I doubt it. But yeah, I guess are you finding most people are talking about this when you're on the phone to clients and that sort of stuff? Is this forefront of everybody's mind right now? In terms of recession, cost of living crisis, all that.
To be fair, our clients know they have not been so much sort of involved in that conversation about the cost of living. Of course, it comes up and everyone's aware of it. Everyone's going to feel it up to a certain degree. How much depends on each individual and their situation. What we talk about more, and when we're talking about investing in property and their thoughts, whether it's someone who's new and thinking about jumping on, or whether it's someone who's already got a portfolio and is thinking, where do I go from here in terms of expanding? Do I buy? Do I hold? Do I sell? The key number that we talk about a lot is where interest rates going. Yeah. Because they have a sort of twofold effect. One effect on your existing portfolio or property, based on where your mortgages are at and when they're up for renewals and what that's going to mean from a cash flow perspective. How much more money you're going to have to chuck into that, if any. But let's be honest, most people, we've all been spoiled with super low interest rates for a super long period of time. So we have to sort of manage that. But it's a case of this. For me, this is where investors who have set about having a strategy and financially planning things for the long game will be okay, because they would have mapped out interest rate increases at some point and factored that into the cash flow, versus people who are just buying on the short-term whim of low interest rates. So the cash flows are really good. Let's buy it. That's where it's going to stay. If they haven't factored in those rate rises, they might be. Well, I'm not going to say in for a surprise, because it's not a surprise anymore. Everyone knows about it, but they might suffer a little bit.
And it's interesting because this, out of all the recessions and downturns and shocks in the marketplaces that I've been involved in 30 years, this is the most predicted, most telegraphed. It's almost like we talk about talking ourselves into a recession. Well, we've definitely been talking ourselves into a recession because everybody's known about this recession. It would be very hard to sit there and go, no, there's not a recession. It might not happen. Actually, the markets have dropped off in terms of the equity markets, the commodity markets, all these sort of things. Tech bubble has burst. Pretty much every aspect has happened. But it's a bit surreal because normally you have this one thing, like maybe COVID or maybe the global financial crisis with Lehman Brothers. But this time we haven't really had that one, bubble burst. And I wonder whether the bubble is still to burst or whether this time it's more of a slow unwinding, in which case, if that's normally you have the bubble burst and then you got 2 years from there where you sort of turn it back around. I wonder whether this is a slow burner where we're shedding off this, shedding off that, and it may be a 2 year that starts, or it may be a 4 year or whatever, which obviously, Great Depression was 4 years downturn. And I'm not saying that this is going to be the same thing, but there are a lot of people saying that is the case. But there's also a lot of people saying it's the opposite. And that's why they're saying they shouldn't be raising interest rates, because it's going to kill off all demand and head us into deflation, and I'll be honest with you, it's beyond my economic capability to know what the hell is going to happen. I think we're definitely going to see a downturn, but whether it's going to be a long-term, massive downturn over a long period of time or not, that remains to be seen. Who knows? I don't know. I guess it's hard, and it must be hard for you guys because you and your team are on the phone all day, every day, talking to clients. So you're getting. I mean, I do videos and I talk about this sort of stuff, but a lot of times the feedback I get is from comments in the social media. But you're getting real life people, and clients. Although it's probably isn't real life because a lot of our clients have money, they have good jobs that are relatively secure, and a lot of those guys are looking to invest now and take advantage of some of the deals that we're negotiating. So maybe we're just in this warped sense of, what is reality, that we live in, to some degree.
I think it's because of the look for every downturn, or for all the pain points that, let's say, the UK clients are feeling right now, or thinking they're going to be feeling. There's the opportunity for the international markets.
That's right.
Because we effectively don't, we have a lot of UK clients, but we also have our fair share of international clients. Middle East, Africa. So the reach is obviously pretty wide. And what I found over the last month or two is a lot of them who haven't been too active in terms of investing or in conversation have sort of dropped a cheeky email since the sterling went like this. And for them, UK is 15-20% discount. So a lot of them are thinking, or last time they bought was at a period when the market was where we are heading towards, maybe a little bit now, on a bit of a downturn, sterling's down, all those things, and the opportunity opens up with them. So, for a lot of them, they're pretty confident that a market like the UK, the economy like the UK's, it will always come back. It's a matter of how long before the economy recovers, the sterling comes back, legal system is strong, political system is strong. I say that with a bit of a smile. Your views, right? But but look, it is compared to most countries. So we'll see.
I think, on that point, the political system being strong, there's no doubt the political system's strong. My healthy skepticism and I guess conspiracy theorist type, thing is it's just not serving the people. It's serving the politicians and the wealthy class. Actually, the politics is very strong. The politics is very secure. The rule of law is very secure. All these sort of things, which actually were, the cornerstones of democracy and capitalism, all of a sudden, for me, have been turned on their ass and turned against who they were serving, And I think that's more, my point. But interestingly, people outside the UK still see the UK as a great place to invest, and I have no doubt it is, including London and and now, in fact, Manchester and Birmingham, to a lesser degree, Liverpool, commuter towns, all those sort of places are quite recognisable, even though England can't win a World Cup, So, it's interesting. We're having a conversation totally off track. I reckon Argentina's going to win because for the last 3 World Cups, whoever played Australia and beat Australia in the rule of 16 went on to win the cup. So clearly Australia's a... I'm going to get hammered for that, but no, but I think coming back to the sort of property side and what 2023 has in store, I think, look, we're definitely going to go into a recession. I don't think in raising interest rates like we have been and not get some, kickback from that. The question whether we go into deflation, if we've raised them too much and actually now we're going to drop like a stone. I think the positive thing in what they've already said is that if they raise them too far, they can at least stimulate, the other way, which is not necessarily a good thing either. But I think, the inflation is pretty high and we're still the highest. It's come down. I mean, we just saw, where is it?
So at 0.4%, so down to 10.7 now?
Yeah, so 10.7, which is slowing. So at least it's not continuing to go up because it was 11.1 in October, 10.9. So it's slowly coming down. I mean, probably not as much as they would have liked and probably not as much as we would like. So what's the predictions for interest rate rises tomorrow? I think it is. It's 15th. It's tomorrow. So they may meet tomorrow.
Pretty much calling it at 0.5%.
Yeah.
Uplift in there. Because like I said at the beginning, they will keep going until they really hammer that inflation out, out of here. Because the last thing they want is for it just to become the norm, and the last thing we all want is for it to become the norm, because it is the silent thief, as we say, inflation. Where it just eats away our real-term money, and you just run it around longer than it needs to be. So for me, obviously there's two camps, and I'm in the camp very firmly of, look, it's going to be painful. It's going to be painful for all of us. It's going to be painful for me. But I'd rather go hard at the beginning and do what has to be done to get rid of it and get it sort of up and down very quickly, versus having it lingering around and the powers to be not making big decisions early on and ones which will then fix things in the long run, because it's all about looking at that long term for me.
Which, it's interesting, talking about decisions early on. I mean, realistically, most governments around the world, they totally let this one slip. They printed so much money thinking that was going to be okay. It wouldn't have the sting in the tail, but it did have the sting in the tail. And, it's hard, because you think that after so many bloody years of economics and economic theory, that they would have nailed it by now. We can do amazing things with AI, and yet we can't get something as simple as, and realistically it's not simple, the economy. Surely somebody has to come up with an AI that can run the economy for us, get rid of all the politicians, run the I'm sure that's on the cards. I'm not sure if the politicians will allow, but it is going to be interesting, because obviously inflation at least now started to come down. The question is how quickly it comes down. Obviously, we've got the heating bills, which people are going to get hit with. And I guess, we've got the normal slow time through winter, which is also good. So, we'll see over the next sort of 3-6 months until spring. Then it's going to be interesting to see if we get the spring bounce or not, because obviously house prices started to drop, things have started slowing down, offers have started to slow down, or I've heard in some places that offers are actually starting to come back on the table. So, it's hard, because for everything that you hear negative, you also get a positive. So it's a hard one to know and to say this is what's going to happen. And normally I'm like, okay, this is what's going to happen. I've looked at this, and this is where I think it is. But right now, I think there's two camps. There's this camp and there's that camp. And I'm normally the one that sits in the middle somewhere, or I'm more on the positive side. I think we are going to go through a period of, there is some pain to be had, which we haven't had. The shares, stocks, commodities, all that sort of stuff have had it. Tech has had it. Property hasn't really had it so far, because we've been coming off so much momentum. But then property didn't start until later with the COVID boom. So when all the money got printed, it had to work its way through the economy, and property is one of the last things that kick off, and so the last things to slow down as well. So we may see that happens over Christmas and New Year. I guess we'll see. I hope that it does, but I think the other problem you've got is the government's not making enough properties. They're not making it easy. They've just dropped the housing targets, which means local councils can decide on their needs. Which means they could make the choice, given arm twists and pressure and all that, not to build more properties, which is just going to send rents up even higher. And that doesn't solve the problem. What we really need is to reverse back to Brexit, invite some more, Eastern European people to come work and do all those low labour jobs, to keep the inflation down, and that would solve all our problems. Maybe not that simple, but yeah.
I think the supply element is an interesting point, because in our world, the new build world, what we're already finding is, there's a lot of developers who are building big schemes that we get involved in are not having too many conversations around launching the next one, the next phase, the next phase, the next phase. And I'm not surprised. And often, when a question that has come up with a lot of our clients is, when they're about to sort of move ahead with a project, is they have a concern of, but there's going to be, a lot of properties being built here. So their concern is, will mine rent out? Will there be too many? What if the market slows down? There's too many properties. And this is where I'm always like, look, where you've got to work in the right areas, of course, which have got the population, the jobs, the infrastructure, support that level of development. But secondly, it comes down to working, being commercially smart, working with smart developers, which is a value we massively bring in, because we know the likes of some of the developers we work with, not going to mention any names, what they do very quickly when they realize that the demand side of things is going to slow down, instead of building more and more and more and forcing themselves to have an oversupply, which could then lead to prices having to come down, they'll just slow down future build program. So they'll starve that specific development, that area of supply. And that means even if prices are not doing this, they're not doing this. They just sort of sit around a bit, and then when things improve again, they'll start ramping it up. And then what you find is when the demand level goes to, because make no mistake, if people are not buying property right now, it's not because there's no demand, where people don't have nowhere to live, have too many properties, or there's anything like that. It's down to uncertainty in the market, and personal circumstances is making them sit on their chair and wait, and let me see how this plays out. Once this plays out, the demand that's built up over the next 6 months, 12 months, 18 months, it all comes flooding back into the market. And that's when you find the developers will start launching and selling very quickly, and prices start doing this. So a lot of people who have been investing for a while, and people who have been in the industry, know that actually they love to come out to play now when there's some fear and calm around, because now they can, maybe get a better deal. They can not be hounded and pushed into, oh, you better do this now, or the prices are going up next month or whatever. They're calm, they can make a decision and lay the foundations for what's going to come in 1, 2, 3 years time.
But you're right, because some of the conversations we've been having with developers is, right now they're slowing down their launches, which is exactly what they will do in this part of the cycle. But I can remember last cycle and the cycle before, where once the time comes where things are starting to stabilise, the economy is getting back, all of a sudden then there's a flood of properties coming on, and that's where every single weekend. I remember I moved to Singapore in 2012, because in 2012 I was flying over there once a month, spending a whole week doing meetings, the whole week doing seminars. We had launches, and every single week I was doing it, and it just got too much flying. And I said to Arlene, let's move to Singapore, grow the business there, be close to the family and that sort of thing. And of course, if we had 3 or 4 years of just launch after launch after launch after launch, and then it's really slowed down now, and it's been slow realistically. Certainly the London side of things has been slow, but that will come back, and that pent up demand when it does come back is huge, and obviously a lot of the developers we use, they're big enough to be able to slow down or quicken. I think that this is where you've got to be careful, because some of the developers, they're desperate to sell their 20 units, and they might be 10 units in, and all of a sudden now sales are slowing down and they're struggling, and that's when now you're seeing some discounts come out. But some of those discounts, you're like, hold on a sec, but we might be buying into a site that might fall over, So you've got to be careful, and that's why we've spent a lot of time picking and choosing who we work with, so that we don't get those issues, so that they are around at the other end of the the recession. It's interesting. We are talking about recession as it's inevitable. However, I was thinking today, and I was just going through some numbers and some stats and looking back in history and looking at where we are and what's happened. There's also another case which is a contrarian thinking, which is that if you look at what's gone on, in terms of the share market and all that sort of stuff, it's shedded a massive amount, tech bubble, all that sort of stuff. The only thing that hasn't happened so far is the unemployment rate. So assuming that, and so the premise is this, is that maybe we've shed off what we needed to shed, and now we may be at the bottom of the market, ready to head out of that. Now, obviously, with interest rates and inflation still going, that'll take some time. So I'm not saying that we're just going to, grow 10% next year or anything like that. But maybe what that means is that a lot of what normally happens in a compressed fashion, normally recession is 2 years, 1 year heading down, 6 months to 1 year heading down, and then the rest of the time coming out. But because a lot of the stuff that happens in that first 6 months, 12 months has happened over the last 18 months, maybe we're in for a different thing, which is more of a, you normally have a U shape or a V shape or a W. Maybe what this is more like a bowl shape, where it's kind of slow down and slow out, who knows? Or it might be slow down and then quick out. That's one of my sort of contrary theories that I'm thinking, is that possible? What's stopping that? But so far, look, yes, unemployment, so it all depends what happens with unemployment. But with so few jobs around, like I'm looking to hire more people. I'm not looking to shed people. Whereas come the last recession, we had 70 odd staff. So it was kind of like, wow, okay, do I really need 70 odd staff? I was kind of rationalizing. Now I'm sitting there going, no, I need to hire more staff, and I know a lot of businesses are like that. Maybe this is a totally different set of circumstances. Maybe that's what we're going to see. I don't know. It's a hard one because you look at some of the markets and some of the share values, and I'm like, maybe I need to start jumping back into my shares trading again now, not waiting. But it could be a W, so we could be come down, it looks like it's coming out or the potential come out, and then we hit the next one. What do they call it? Dead cat bounce. Who knows?
Yeah.
But yeah, so I suppose the other side I was going to look at is, which is totally separate to all this sort of stuff, kind of, which is AI. It's amazing what AI has done. I've been playing with it over the last couple of weeks and days and that sort of stuff. And so today I wrote my first, well, I didn't write it, but Virtual Brett wrote it. And, so what I did is I put into this, I'm using, I forgot what it's called now. It's not the normal one, the Chat GPT that everyone's using. It's the other one that I've got, which is very similar, but it has a more up-to-date thing, so I can do news effectively. But so I thought I'd just put in, and I put in what are the top 10, biggest news stories in the UK property and UK economy today. And it pumped out these 10 things, which interestingly are pretty topical right now, And then I said, take these 10 things and write a 3,000 word article about it. So we've got like a whole article there, on the website. You can check it out. You'll see it does say Virtual Brett. So don't think that it's me writing this, but actually it's a pretty bloody good go at it. Economists are predicting housing market boom and crash in the UK. Property market downturn for potential prices fall 30%. These are predictions that are out there. Increased mortgage concerns, that's happening anyway because obviously interest rates are going off. House price correction unfolding faster than anticipated. Yeah, things have slowed down, certainly asking prices and things like that. But although house price correction, the amount is not huge, but it is happening already. Yeah, rising interest rates, but to be fair, it would have happened anyway because we're going into winter. Rising interest rates and soaring inflation weighing on global housing market. Yep, correct. Large fall in home new buyer inquiries in October. Yeah, rising unemployment risks adding. So this is the thing: rising unemployment risks adding to the pressure on the UK. So it's the risks right now. It's not the reality. Actually, a lot of businesses are still looking for people because they're looking for people. Maybe that is going to be our saving grace because there's so few people to fill so many jobs. So just keep that in mind because that's something that I'm actually going to do a bit more research into it, and that may come into where I get my predictions before the end of the year about things may be better than they seem, based on that one thing, the unemployment rate. UK economy contracting third quarter. Yep, so it's contracted 0.2. So it's not a huge contraction, but it's a contraction nonetheless. Danger in housing markets if unemployment rises sharply. That's pretty stating the obvious. Limited risk of shock reverberating through wider financial market. The reason they say that is because basically banks and financial institutions have been called to account. They've been putting, responsible lending, all this sort of stuff, which has happened since the GFC, the global financial crisis, which are already in place. Yeah. So they're likely to be a lot more robust. Yeah. But it's pretty interesting. It's an interesting article to read because it actually, for the first time, I've used a lot of these things in the past, and a lot of them just don't write very well, don't make very much sense. Actually, this one is doing pretty well, and I'm pretty impressed with it. So yeah, we're starting now to integrate a lot more AI into the stuff we do. Certainly in the researching side of things and getting that, and then I'll take that, reword it myself. I've been doing that for quite some time. But yeah, it's interesting. Any thoughts for you, Ritesh?
In terms of the AI,
AI, yeah.
that scares me, Brett. The metaverse. Well, that's
well, it's funny actually because we're like I'm right up on the metaverse. I've been sort of researching for a while. Yeah, we're looking to take a decentralized and potentially take a plot of land to put our office in the metaverse. So I've looked at that. Because I think as much as people are denying it and as much as it's taking a kick in the guts, it is going to happen. And things, just as we used to trade face to face and go into a shop, we then went to the internet. The next is the metaverse, and potentially the metaverse will be a pair of 3D glasses, that are attached to our phone, that are projecting onto our eyes, eyelids, whatever, who knows, probably even a neural link in the back of our head. It will happen because there's so much technology and so many smart people that are building it out. But the interesting thing with property is, and I was chatting about this the other day with one of my mentors. He, he's a mortgage broker, runs a non-bank lender in Australia, which I helped set up many years ago now. But I chatted to him and just about this whole concepts, and the reality is it is going to happen, and things are moving that way, even though people don't, agree with it. And I think it's going to be more and more of a part of our life as we move in. So they're already starting to think about how that affects. But what I was saying was, I don't think anyone's pegged it and done AI prop tech really, really well so far. I think we're still in the early days of it. I think there's still a lot of opportunity. So yeah, Darren's just sent us a message. So he said, geez, I didn't change the color. Hey Darren, how are you? So land registry, average house prices shows terrace prices have overtaken flat prices since the start of the year. Do you think flats are undervalued to terraces? Are they? Are you talking about a specific area? I thought it was the other way around. That actually, actually, it might be new builds.
New builds have, outperformed, yeah.
Yeah. Okay. Yeah. So I'll be honest with you. I haven't actually looked at the land registry prices, terrace versus flats. I thought actually we had it on last week, I think, or the week before. They were tracking very similar. So, do we think that they're undervalued to terraces? Do I think it depends on the area? So different areas with different dynamics and different things. So I wouldn't say they are or they aren't, but what I would say is, you've got to look in your specific area that you're talking about, and then look at what's going on in that area. And that's with anything. Because I wouldn't buy a flat just because it's undervalued compared to a terrace, because the market can change and that sort of stuff. I would look at both on their merits, because the flat is a different investment to a terrace house. You may find the terrace house is a lot older, energy efficiency, but you may find that actually it's been updated and it's fine, and you're buying a secondhand flat that's got a crappy block manager who just abuses everything, So yeah, it really depends. That it's very hard to say, which is better, apple or orange. It depends what you like. It depends what apple, the features of the apple and the features of the orange are. So hopefully that sort of answers the questions without. And look, will they return higher again? Which is the final part of that question. What you tend to find is they all sort of interact. So I can't put my hands the same way, but they'll go up. Some will take over, others will take over, and they're sort of all that sort of intricate thing. So it really depends right now. I don't normally go and track terrace versus apartments, that sort of thing. But what I will do is look at new build premium. So if say we do new build, which is our big thing, sometimes the new build premium in an area gets up too much compared to the secondary market, in which case that's not the time to be buying new build. But that's certainly not the case now. Now we're starting to get some good negotiation with developers, and even the developers who aren't negotiating yet are starting to talk about it, and you can just see they're lining up just in case. Cool. All right, what else we got to talk about then? We've talked about the recession. We're not quite there yet. We've talked about inflation.
Go on, Brent. Property prices next year. Give us a percentage.
I'm actually going to do an article about this, which I'm just sort of formulating now, but on my house price provision, which I do every year. This is the thing, and this is why I raised the unemployment thing. Because unemployment hasn't hit yet, I'm almost something. Cheers, Darren. Something in me is thinking maybe we're not going to see such a drop next year, and things may actually turn out better. Yeah. And when I say better, I don't mean 10% growth, but I don't mean 20% drop or anything like that. What I'm thinking is, could we end up with a 5% increase or a steady state for next year, which according to most people is totally unreasonable. It should be dropping 10, 20, 30%, which most people are saying. So that's my concern, is because the job market is so robust right now, and because the unemployment is so low, that could either stretch out the recession, and so rather than being a quick shed, it's a slow shed, but and rather than being a deep recession quickly, it's a shallow recession or a shallow downturn over a longer period of time. That's what I don't know right now. So what do I think? Look, my gut feel right now would say -5, -10 if we hit recession. But then I'm also, when I weigh up this unemployment thing, I'm kind of like, you know what? Maybe, we can turn that round. I don't know. I'll be honest. Normally I'm like, this is what I think will happen. Right now, this is what I think will happen. But I'm sort of going, but there's this bit of uncertainty in it, and it's uncertainty to the upside, not to the downside. Yeah. Which a lot of times, this could happen and therefore change all that downside. I'm not one of these guys that says we're going to have 30% drop in house prices or 50% drop, or the share market's got another 50% to drop. Not yet. What about you?
I think it's going to be very area specific. If you're from a blanket perspective, if you just said, let's just take the whole country into the equation.
Yeah.
I think we could be, as a country, I think you'd be 0 to 5% downturn is where I think it's going to sit next year. And a big part of that is because there is still a lack of supply in the marketplace versus demand. There is a lot of people aren't leveraged nowhere near to what they were during the global financial crisis.
Yeah.
And also there's been talk from Jeremy Hunt to encouraging banks to be more flexible and to extend people's mortgage terms, to allow them to go offer products which take them onto an interest only, to be able to manage their monthly mortgage payments. So that should keep things like repossessions and all that sort of stuff down. So I think there's supply demand with the government hopefully following through with the talk of telling banks to be more flexible. If there's a general appetite for people not to take repossessions and do everything they can to keep people in their homes, affordable plans to ride out the next couple of years or whatever that looks like, then I think, but I think some areas, and this might sound outrageous to some people, but I think certain areas will actually be up circa 5%. And I say this not from just a total gut feeling, from certain conversations with developers in certain areas and emails I'm getting about price points moving and all this sort of stuff. And there's a sort of I can see it's in very specific areas where, they'll hold up pretty well. So 0 to 5 in terms of the downside, my more downside approach, but don't be surprised if certain specific areas even go up to 5%.
Yeah. Because that's the other thing too, is London prices haven't really done a lot. They've been sort of sticking to where they are, not really doing much. But they could come back very quickly because actually, if the lending got freed up and you got the international buyers coming in, you could actually see some, price increases. I agree. It does. I mean, I've watched the YouTube channels that talk about 40-50% drops and, the whole economic crisis. We're going to swap over to central bank digital currencies. We're going to, the US is going to no longer be the reserve currency. All these sort of YouTube channels, which are a lot of it I can't help but think they're clickbait, because I've seen some of these guys day after day get, and they're getting 100,000 views on their videos. They're getting, they're doing really well from a YouTube perspective. But you look at actually their predictions, and for the most part, they're just so wildly wrong continuously. But because they're selling negative, people just lap it up. People want to, and unfortunately, this is the reality: is we've become so used to making excuses to why we're not successful, and this might hit home, with some people. We've become so victim conscious. Yeah, in other words, we've become so we're victims that we look for and we crave the negative news so we can justify our situation, which isn't a good way to be. If you want to be successful, you've got to take personal responsibility. You've got to accept that you are the only person that takes responsibility for your life, and anything external, is you can't blame anything external. When you do that, that's very hard, and that's why I think these YouTube channels do very well, because they sell the negative narrative, and therefore people can justify their situation. But that's not going to make them successful. You've got to sort of get over that and get where the real information is. And there is some great information out there. I have to say, the content that's been put out on a number of different channels, is fantastic right now. You used to have to go to university to get really good quality, cutting edge information. Now, university is not where it's at. Actually, YouTube is where it's at. And I'm not going to say TikTok's where it's at. That's a whole other story. But YouTube, actually, there is a lot of content being done there that is fantastic and right on point. And, and for me, that's why, I'm spending 2 hours a day consuming content, but positive content, not this negative shit that's just clickbait. So, yeah. What else? I think that's pretty much it for this week. I think, for me, I'm going into 2023 with a pretty positive attitude. I mean, as much as the recession's on the horizon, I'm not, battening down the hatches. We're not just saying, let's cut all the costs back. We've been through that sort of thing. We've done a few cost-cutting rounds where we've looked at, we're spending way too much on software, paying all sorts of money. So we've got rid of some of that sort of stuff. So we've trimmed some of that fat, but we've not actually got rid of any people. There's no intention of getting rid of any people at this stage. And hopefully we don't have to get rid of any people. That's, which if you look at the global financial crisis, it was very different. I had to sit down and I had to go, can we really afford to have these 70, 75 people, whatever we had? Maybe we can get away with, and I think we went from 75 to 45.
You had a marketing team of 10 people, right?
Yeah, I know. Yeah. Which, to be fair, I want that marketing team back now because I'm sick of doing it myself. No, but no, I mean, in actual fact, it's interesting. We are looking to build that marketing team back up. We've been chatting about it extensively. Because that's where things are at now. So yeah. What about you? How are you going to 2023?
Yeah, I think my thoughts on it are, look, it could be 5 up, 10 down, 10 up, whatever. You can't control it. We can't sit here and physically, for sure, say which way. Everyone's got their 2 pence they're gonna put into the hat, and depending on what they do and their narrative, I accept that. Of course, I'm going to be positive about property. This is what we do. But the reality is, with property, I always say it's a long game. So if you buy property, thinking, well, I'm buying it because I think next year this will happen, that will happen. You're sort of just thinking about it the wrong way.
Yeah.
If you think 5, 10, 15 years, and you can say to yourself that I know that if I buy a property, regardless of what happens next year, I know that this property will be worth more, or these properties will be worth more in 5, 10, 15 years' time.
Yeah.
I've got the capital here to do something. I've got some money here to do something. So rather than spend it on my lifestyle and the money, because the money will just go away. There's no such thing as here's a couple of 100K, 100K. I'm not going to invest right now, but I'm going to keep it there because when the market's right in 6 months, 12 months, I'm going to invest it. That 100K will look like 50K. I promise you that. Because you need to find somewhere to spend it. Family, kids, all that sort of stuff, whatever. It will go.
And if you don't find a way to spend it, then inflation will bloody take it from 75 down to 50 as well. So,
exactly. So my message is just, up to a certain degree, who cares with the prices go up, down, short term? Just think long, things you can control, which is to buy and hold, and then just let the market do what it does, which we know, long term, it will go up.
Yep. Yeah, no, cool. Okay. Good. All right, mate. Well, we're back on the 4th of January next. So we're not back next week, 4th of January. And, hopefully we'll be bringing in your content because we've got in our building, we've got a podcast company. And so they're going to be helping us build some podcasts or build the podcast out, get it out there and do it, update the professionalism and the organisation, all that sort of stuff. We'll see how wonderful they are. But yeah, no, good guys. All right, we'll have a fantastic Christmas from all of us at Easy Track and Gladfish. And we'll see you for a fantastic 2023. We'll see what it holds. All right, guys. See you later. Bye.
See you later. Bye.
Yep.